exposes China's banking system to facing a liquidity crunch, much like the Western financial institutes faced in the 2008 global financial crisis.
I think, Cathy, it's already facing a liquidity crunch in the last couple of weeks. You've seen that with the rise in 14-day repo rate. Even the 3-month SHIBOR rate has shot up a lot. So I think China's already facing a liquidity crunch in the banking sector. I think the most interesting thing is a central bank in any country can always ease the liquidity crunch through open market operations. In China's case, they could cut the reserve requirement ratio substantially. It's 20%. The interesting thing is the People's Bank of China has stood by. They haven't done that. And so we take that as an intentional policy sign that they are really serious about wanting to deal with the financial systemic risks, and that this is an intentional policy of keeping liquidity pretty tight right now.
Do you think they're doing a good job on it? And what impact are these systematic risks in China having on the region?
Well, I think it depends on your time frame. But I think they are doing the right thing. If you're thinking about what is the objectives of the central bank and policymakers in China, and especially considering we have a new leadership that's in power for 10 years, they're thinking much more long term. They're thinking over the next 10 years they're in power, and there is a serious risk of a financial crisis unless the economy does start deleveraging and the excesses in the property market are dealt with. And I think that's what's happening now. So I see it as good for China's growth rates into 2014, 2015, 2016. What it does mean, though, it comes at the cost of near-term growth. And so we do expect a slowdown this year to about 7.3% in the second half. And we see a 30% chance it could actually be below 7%. So there's downside risks this year to growth, and it's really because, you know, when you have an economy deleveraging, when you have growth slowing, when you have policy putting the foot on the brakes, there's always a risk of miscalculation. And I guess the biggest risk for China is a wave of defaults in the corporate sector. What it means for the rest of Asia, I think it's a drag for the rest of Asia. China, second biggest economy in the world, clearly a very important growth pole for Asia, ex-Japan, the rest of Asia. I guess the silver lining is we do at Nomura feel that the US economy is going to start to strengthen in the second half, Japan as well, and Euro area will come out only just of recession, and that should pretty much counterbalance the situation in China. But global growth, it is starting to look more uncertain now on whether we will get a decent recovery because of China.